Hey, what up, YouTube? It's your boy, the Stock Dude, back on the prowl again. Now, listen to this. Have you ever wanted to invest your money like the rich? Let me tell you how the rich invest their money. The rich invest their money two different ways. First way is the rich buys a stock or buys stock in a company that has high growth potential. A lot of times that means buying a stock when nobody else has the confidence to buy. Second thing the rich do, they like to buy stocks that have healthy, strong, reliable dividends, because anybody that has money can tell you that dividends make a huge difference over the long haul in your bank account. So guess what? I got one of each. A high flyer with growth potential that's enormous, and solid, long-term, sustainable dividends. Let's get right into it. Now, as I said just a second ago, if you want to invest like the rich, you gotta have a super high growth potential stock in your portfolio. Now, the rich, they will buy a stock in a company when no one else has the nerve to buy it. They'll buy in a company and wait on that company's potential to realize itself. Now, that stock that I have for you guys is a stock that goes by the name of Clover Health Investment Corporation. Ticker symbol is CLOV. Now, Clover Health, I'm going to read a little bit of the profile. Clover Health Investment Corporations operates as a Medicare Advantage insurer in the United States. The company, through its software platform, provides preferred provider organization and health maintenance organization health plans for Medicare eligible consumers. Clover Health Investment Corporation was founded in 2012 and is headquartered in Franklin, Tennessee. Tennessee, Tennessee, Tennessee. But anyway, Clover Health Investments, it's a Medicare healthcare company. Now, in case you haven't heard, or in case you've been living on Mars or under a rock, we in the middle of a pandemic globally, in the middle of a pandemic all over the world. Now, one thing I've been hearing over and over again from many different sources is the fact that during this pandemic, a lot of people have lost their health care plan through their jobs, because a lot of people have lost the job that gave them their health care insurance. And if that continues over a period of time, which it already has, we looking at over a year now dealing with the pandemic. Across the board, people's health have been declining. A lot of people's health have gone down because of being without routine maintenance health care. So Clover Health can help these people, and Clover Health can make a gang of money by doing it. Medicare, that's for our older generation. That's important. And this company is pretty much brand new. As I'm looking at my information, now Clover Health just came public as of January of this year by the way of a SPAC. Now, SPAC, SPAC, stands for Special Purpose Acquisition Company. Now, what that is where another company, normally the larger company who has better funding, pays for the smaller company to become a publicly traded company. In this case, Clover Healthcare is that smaller company. So they were funded by another company, and a lot of times people call those other companies a blank check company, being that that company just basically gives the smaller company whom they believe in and who they are going to help become publicly traded. Basically, they'll give them a blank check in order to fund that company and get them to where they need to go to be listed on the U.S. stock exchange. Blank check. I wish I can get somebody to give me a blank check on my potential. Need to work on that too. But anyway, before they went public, this company, Clover Health, was highly anticipated because people that invest millions of dollars and billions of dollars, like that's what we're talking about, how to invest like the rich. People that have money, they see the enormous growth potential in a company like Clover Health. But the only thing with Clover Health that happened a while back, they had a short seller that accused this company of misleading practices, and basically the price of Clover Health crashed. But I want to say this, I want to make this clear. A short seller, they are the people who make money when the stock price goes down. So let's think about this thing. So a short seller came out and accused Clover Health of basically lying, an unfair business practice concerning the way that that company is run. But let's think about it though. They make money when the stock price goes down. So they say and they do whatever they can to make a company that they're shorting make the price go down. So think about this. If you are a short seller, you also are able to buy shares in the same company that you are down talking. So what I see over and over again is that people get on television, people write these articles, and they flap them gums. But at the same time, when the price crashes, they're buying it while they're panicking average investors out of it. So in other words, you selling it at the bottom, at the lowest price, and the same ones that's talking about how bad the company is are on the other side buying shares. Now, like I always say, I'm not a stock expert, nor do I play one on YouTube. So anything that you hear, please do your own due diligence and your own research. But that being said, what I do know about for sure, is how to read these charts. So as I say, people that are down talking and downgrading the stock by mouth, on the back end, they're buying thousands of shares of the same company that they're downgrading and they're talking about and possibly even lying about. Let us go to a ZIT chart. Look right here. Right here, what is the date? On April the 8th, we had 77 million shares bought and or sold. Let that sink in. 77 million shares bought and or sold. The average volume is only 16.5 million. But on April the 8th, you had almost 77 million shares bought and sold. And I would guarantee you that more were bought than more sold. Reason I can say that? Look at the size of this big green candle right here. Sweet, ain't it? Look at it. You see it? That's telling me people buying this. Now, why are they buying it if the short seller is talking about how bad the company is and how they're lying on the records and lying with the information? Somebody ain't telling the truth. So I'll believe this chart in what I see before I believe what I hear, because I'm a man of God, and I know that my Bible says that you know them by their fruits. In other words, don't believe what people say. Watch what they do. And what I'm seeing is I'm hearing a lot of bad things about the company, but I'm seeing a lot of shares being bought. And as I seen right here once again on Friday, April the 16th, 2021, we had 247 million shares bought on Friday. The average is only 16.5 million. But on Friday, you had 247 million plus shares change hands. So let me just think about this thing for about 5 seconds. It's going up. That's right. It's going up. Don't believe what you hear. Watch what they do. Clover Health, I feel that it's going higher. And if you want to get that paper and invest like the rich, put your hundreds of dollars with their millions of dollars. You get that principle set in your mind over the long term, you'll be just fine. So check out Clover Health Investments Corporation, ticker symbol CLOV. Now, as I said before, I got 2 stocks. Clover Health is the first stock. That's super high growth potential stock to put in your portfolio for you to hold and reap the benefits of a stock that you got into early while everybody else was scared and waiting, trying to see, oh no, man, oh no, I'm gonna think about why everybody else is doing that. Get it. Clover Health. Now, the second stock, rich people also like this kind of stock. The second stock is a stock that has a steady, healthy, strong, and reliable dividend payment. Because as I've said many times before on this channel, a dividend payment is almost like your stocks having babies. That's right, like your stocks having babies. Because a dividend payment can multiply the shares that you own. You buy 100, let that dividend reinvest in what they call a DRIP plan, DRIP, dividend reinvestment plan, a DRIP plan. That way the shares will be multiplied. So instead of paying you a dividend when the dividend is paid in cash, the company will roll over that amount of cash and buy you additional shares. So the way that works is like this. You have 100 shares. Let's just say, sake of argument, you buy 100 shares. That dividend payment keeps rolling over, and instead of a small amount of money when the dividend is paid, they buy you a small amount of shares. They buy you fractional shares. So in 10 years, who knows, your 100 shares could be 300, 400. You can buy 100 and let those dividends roll over every quarter when it's paid, or like in this case, the next stock that I have pays a dividend every month. So every month, your stocks are doing just like this, stacking. So that super high growth stock is Clover Health, and that one with the reliable dividend coming in, that's reliable, goes by the name of Guggenheim Strategic Opportunities Fund, ticker symbol GOF. Now, right now, the price is only $21.88. Now, like most of the market, Guggenheim is pretty close to all-time highs in price. All-time high, the 52-week range high, was $21.98. Now, Guggenheim traded on Friday up to $21.88. Now, looking at this chart, what lets me know that Guggenheim is going to eventually go and break out to new highs is simply this. I always do it. Look at the bottom of the screen. All these green volume bars. This big one right here that came in on April the 13th, heavy volume at 526,090, or 500, a whole lot, put it like that, a whole lot of volume. It came in, a whole lot of volume came in on April the 13th. Now, I do these things straight through with no whole lot of editing. So when I get tongue-tied, you gotta forgive me. Don't worry about it. Anyway, volume came in on April the 13th at over 500,000. The average volume is almost 300,000, but on that day you had almost twice as much volume as normal. Now, as I said before, this is a reliable dividend paying stock, paying a 10% dividend. Let me say that again. A 10% dividend. And this is a closed-end fund. Now, we talk about on this channel often closed-end funds. Closed-end funds, I've said in the past, is exactly what this video is about now. I've said in the past, closed-end funds is investing how the rich invest. The rich like steady, high-paying dividends where you don't have to worry about it. You can put this in your IRA, and if you're retired, you can put this in your retirement account. Then when you get to be 60, 65, whenever you retire, you got a reliable dividend payment coming in, paying you 10% a year. Think about it. You get 10% a year dividend growth on your investment. And look at this. This thing is in an upward channel, coming from the lows in November of around $17.40, and it's been slowly grinding higher up to $21.88 as of Friday. So not only are you getting a hefty dividend payment, you're getting stock appreciation. In other words, the stock is rising in its price. And let's look at this dividend payment. On the Dividend Channel website, it breaks down the dividend payment, how much and when you receive it. It says right here, dividend frequency is monthly. So not only are your stocks having babies by the dividend payment, hopefully you reinvest them like I recommend, they're actually having babies every month. In other words, you get fractional shares put into your account on a monthly basis every time that this dividend payment of 18 cents per share per month kicks in. A lot of people think, well, 18 cents, that ain't a lot of money. But you get 1,000 shares and you getting 18 cents per share, that's $180 plus per month. I take that. And I'm looking at the dividend history. They started paying the dividend in 2007. 2007, the dividend was 14 cents per share. And here we are in 2021, the dividend is higher. It's 18 cents per share. So not only have they not missed a lot of dividend payments, over time the dividend goes higher. And that's what you want. So check out Guggenheim Strategic Opportunities Fund. Now I got a few notes about them. Once again, it's a closed-end balanced mutual fund. And a closed-end fund is basically a managed fund. And this is a closed-end fund, so that means that basically your dividends make this worth owning. That's the only way to put it. It's worth having in your portfolio because your dividends are huge. It's like a mutual fund that's on steroids because this is paying you a 10% a year dividend. 10% on your money. You put your money in a bank, even in a credit union, guarantee you, you're not going to be making 10% on your money. Now, this is steady, and it's a reliable payment, once again, for retirement. And it's coming in on heavy volume as of, what's that date? As of April the 13th. Heavy, heavy volume. Now, that heavy volume tells me it's going up. It's going higher. That heavy volume eventually will break through the all-time highs. And when this thing breaks through the $22 a price per share level, this thing is going to all-time highs. And I would not be surprised that if in a year's time, this is trading at over $25, $30 or higher. Now, let's say if I'm wrong about that. If I'm wrong, you got a 10% dividend payment coming in along the way while you wait for this to play out. If I'm wrong, ain't nothing wrong with being wrong. I don't know what these stocks are going to do. That's why I say do your own due diligence. But what I've seen in the past is this stock has been grinding higher in this upward trend since November of last year. And one thing I know for a fact, if I'm wrong and the price comes down, guess what? When the price comes down, the dividend payment, which is already 10%, goes higher. So if the price comes down, that 10% dividend will go to 11% that you'll make, 12% that you'll make until it finally turns around. Now, as far as it going down, you don't have anything to really worry about until that stock goes below $19 a share. That's a solid support level at $19 a share. So if it goes down, set you a stop loss at $19 a share and enjoy that dividend payment of 10% or even higher and keep it moving. So you want to know how to invest like the rich. You want to see how to get that money moving like the rich. I just gave you two of them. First one, Clover Health Investment Corporation, coming in at only $8.82. And by the way, this stock has a heavy short interest. I'm looking at 27.5% short flow. So I'm telling you now, this can be, not saying it will be, but the same thing can be for Clover Health what happened with GameStop just a little while ago. You remember a few months ago when GameStop went crazy, and the reason GameStop went crazy is because of this right here. Heavily shorted stock. GameStop was heavily shorted. Everybody thought and everybody wanted it to go down. Right now, Clover Health is in the exact same position that GameStop was. So at only $8.82 with a potential price explosion in the future behind all of this short interest, because when stocks are shorted, people who are shorting those stocks have to buy back shares to stop losing money. So if this thing spikes higher, guess what? People are going to help you push the price even higher, because the ones that are short are going to have to buy shares in order to close out a losing position. So if this thing breaks over the $10 mark, Clover Health, I guarantee you, is going towards $17, $18 or higher. So wait for that break over 10. If it breaks 10, get in. If it breaks 10, get in. That's the first one. Second one is Guggenheim Strategic Opportunities Fund, paying a 10% dividend, steady money coming in on a monthly basis. Those are the two right there that I recommend that you check out if you want to learn how to invest like the rich. That way, in your retirement days, you can do that, and investing like the rich will make you do this. Just sit back and let the money come in. I'm the one known as the stock dude. I hope you enjoyed the video. Holler at your boy later.